Tonight, our class, all right, thank you. Please confirm. I'm sure you can hear me clearly. You can respond via chat to minimize distraction in the class. At the same time, you can also unmute your speaker. If you have any question, you can ask by by raising up your hand in the classroom. Once again, good evening. It is exactly 8:30. Our class tonight shall be a completion of question number 2 we started last week. Or sorry, the question we started on Sunday. Now let's do a recap of the topic we are looking at. We are looking at capital reconstruction. For those that started the class with us, we started from corporate failure. We explained that corporate failure can be defined as the inability of a corporate company to consistently achieve sufficient profit to meet the expectation of the business owner. Where this situation is not checkmated, the company may be forced into liquidation. That is corporate failure. Thereafter, we move to the second topic, which is capital reconstruction and business reorganization. We explained that capital reconstruction is a major reorganization of a company capital structure. And this exercise is usually carried out where a company is facing financial difficulties and the possibility of the company going into liquidation is very high. In that case, the company can decide, or the company's directors can propose a scheme of capital reconstruction. Capital reconstruction is the reorganization of the company's capital structure. This reconstruction might include revaluation of assets, introduction of additional capital to the business, conversion of debt capital to equity capital. The existing shareholders may be required to relinquish part of their shares or all their shares and accept a smaller quantity of new shares in the reconstructed company. We explained this. And we emphasize that the purpose of capital reconstruction is to find a way to allow the company to continue in business and avoid liquidation. And we also emphasize that if you are faced with question on capital reconstruction, you are going to be comparing two positions. If you are faced with question on capital reconstruction, you are going to be comparing two positions. Position 1, if the company is liquidated and the assets realized, who gets what? What will individual party benefit from liquidation? You are going to consider that position 1, liquidation. Position 2, if the company is reconstructed as proposed by the directors, what will the individual party benefit from the reconstruction? You now compare these two positions. You can now advise your clients whether to accept reconstruction or to accept liquidation. That was the explanation we had last time. Thereafter, we tried to solve a question. The question we tried to solve is in page 123, illustration 2. Let us do a reread of the question again. Recall, we have solved part A of this question. But let us read the question again so as to bring the last discussion closer to us. All right, any question, please? If there's no question, I'm going to read illustration 2. You can look at your screen, or you can refer to page 123, question number 1. That is, in the study part, the company is named Diamond Limited. Or you can use the material on your screen. All right, let's go to this question together. The latest statement of financial position of Mark Me Nigerian Limited is summarized below. We have the non-current assets, 28.5 million. Current assets, 1, inventory and work in progress, 7.5 million. Receivables, 9 million. Total current assets, 26.5 million. Current liabilities, unsecured payable, 20 million. Bank overdraft unsecured, 8 million. Total current liability, 28 million. If you look at the working capital, current asset less current liability, this company has a negative working capital. An indication that this company might be having problem. Next, liability falling due after more than 1 year, 10% secured debentures. If you look at that, secured debentures, debentures is a liability. Now this debenture is now secured. That means there's a collateral for these debentures. All right. Next, we have the capital and reserves. The call-up share capital, 20 million. Statement of profit or loss, 8 million. Next paragraph. Mark Mick Nigerian Limited. Call-up share capital consists of 20 million, 1 naira ordinary shares, issued and fully paid. That means the number of shares in this company is 20 million shares. The nominal price per share is 1 naira. The non-current assets comprise freehold property with a book value of 15 million, plants and machinery with a book value of 13.5. Debentures are secured on the freehold property. You can asterisk this place or underline this place. Debentures, a liability secured on the particular asset or on a specific asset of the company. That is what we call fees charge. The next paragraph. In recent years, the company suffered series of trading losses, which has brought it to the brink of liquidation. The director estimates that in a first sale of the asset, okay, let's explain that if the company is forced into liquidation and the assets sold, then the directors can realize the following amount. That is liquidation now. Freehold property 10 million, plant and machinery 5 million, inventory 8.5 million, receivable 8.5 million. Next paragraph. The cost of liquidation are estimated to be 3,850,000. However, trading conditions are now improving, and the directors estimate that if a new investment in plants and machinery costing 12.5 million were undertaken, the company should be able to generate annual profits before interest of 8,750,000. In order to take advantage of this, they have put forward, the directors has put forward the following proposed reconstruction scheme. Proposal 1, freehold property should be written down by 5 million. Plant and machinery written down by 5.5 million. Inventory and work in progress by 4 million. And receivables by 500,000. 2, the ordinary shares should be written down by 15 million. And the debit balance on the statement of profit or loss written off. 3, the secured debentures holder will exchange their debentures for 7.5 million ordinary shares and 6.5 million, 14% unsecured loan stock, repayable 5 years time. The bank overdraft should be written off, and the bank should receive 6 million, 14% unsecured loan stock, repayable in 5 years time as compensation. Next, the unsecured payables should be written down by 25%. Note 6. A rights issue of 141 at par is to be made on the share capital after the above adjustments have been made. Next. 12.5 million will be invested in new plants and machinery. Requirements A. Prepare the statement of financial position of the company after the completion of the reconstruction. If you look at question A, it's about reconstruction. Prepare post-reconstruction statement of financial position. That was the question the examiner was trying to ask us. We have prepared this statement at our last class. The statement was prepared. Now the B part of this question. Prepare reports, including appropriate calculations, discussing the advantages and the disadvantages of the proposed reconstruction from the viewpoints of 1, the ordinary shareholders, 2, the secured debentures holder, 3, bank. This is the question for 20 marks. If you now look at this A part, when we go into calculation for the report, if you are required to prepare or to look at a reconstruction, whether it is the advantages and disadvantages, for you to do this, you are going to compare two positions. You are going to assume that if this company is liquidated and the assets realized, how much will ordinary shareholders collect? How much will secure debentures holder collect? How much will the bank collect? That is position 1. Position 2, you are going to ask yourself, if this company is reconstructed as proposed, what will ordinary shareholders benefit? What will secure debentures holders benefit? What will the bank benefit? When you are done, you now compare the two sides. What is the benefit coming from reconstruction? What is the benefit coming from liquidation? We now compare. You can now be able to decide whether it is better to reconstruct or allow the company to liquidate. Is my explanation clear, please? All right.
Yes.
All right, thank you. Now let's now move to the B part. Okay. Thank you for joining the physical class students. Sorry for troubling you. Okay. These notes, for those that were in class last week, we have these notes. We shall continue from here today. But we are now moving to the B part of this question. Of course, the reports you are going to prepare involve report writing and calculation. So we are going to take the calculation here. The report will be provided, but let us explain the calculation. The first thing you are going to assume is that if the company is liquidated, how much can we realize from the sale of the company's assets? So you are going to come here, your report. Okay, I think it's fine now. We can move now. Suggested solution. Oh, sorry. Oh, sorry. It's upside down. Okay. Okay. Yeah, I'm trying to pick my pen. All right. In case of liquidation, please, if you have the question, if the company is forced into liquidation, how much can we realize from the sale of the assets? Do you have the question? Yes. Amounts realized on disposal. And what are we going to get from freehold property? How much?
Million.
10 million. Keep in view. Next.
Plant and machinery, 5 million.
Plant and machinery. Thank you. I don't want to be slowing down up and down. We can get 5 million. Next.
Inventory, 8.5 million.
Inventory and work in progress. We can get 8.5 million if this company is liquidated. Next, please.
Receivables, 8.5 million.
Receivables, we can get 8.5. We can get 8.5. Next. That's all. Please sum up. Total?
22.
22 million.
Sir, in our last class, in the physical class, we already wrote the heading of the reports. Can we just start writing this?
Thank you. You can start writing it. Good.
Okay.
Thank you. You can put it. That's fine. That should be Sarah.
Yes, sir.
You can start.
No,
That's good.
Sorry, sir. Some of us did not start class in the last. Okay, sorry.
Okay. It's very possible that some might not be in the class last week, but you know, we cannot just go back and start the question again. So what you try to do, assuming you are joining the class, you missed last class. What I will expect you to do is, after the lecture, meet with your classmates, try to see what we have done last week. Then if there's any area of concern, you can now ask me questions privately. You can private chat me. So it will not be easy to say, let's go back to the class. Some will still join in February. Are you going to go back to that class? So just try to make up the notes you miss. All right. Now you observe that we didn't pick freehold property. Why? We didn't pick freehold property because that asset has been used as a collateral for debentures, a fixed charge. In the course of reading the question, examiner says debentures are secured on freehold property. Can we see that part of the question, please?
Yes, sir.
Okay, let me quickly refer to it because I want to, as much as possible, I want to take the student along on this question. Okay, I just want to refer to it. I want to quickly refer to it. Please note this. The cost of liquidation, 3,850,000. Please note it. That means to liquidate these assets, we incur an expenses of 3,850,000. So please note it. Yeah, look at it, please. The debentures are secured on the freehold property. This is what we call fixed charge. A liability is secured on a particular asset of the company. In the event of liquidation, any money realized from that asset will be used to settle that particular liability. In this case, the 10 million, this 10 million from freehold property will be used to settle the debentures holder under liquidation. We cannot take this to general distribution. We only pick plants and machinery 5 million. The company can realize 5 million from plants. We can realize 8.5 million from inventory. We can realize 8.5 million from receivables. We can realize 10 million from property. But that property has been used as a collateral for a particular liability. In that case, that 10 million will be set aside. It cannot be taken to general distribution. Is that point clear, please? Let's go back to that question. Or let's go back to our board. Okay. Now, we have picked all the assets that is not charged. The total amount is 22 million. You now less, this is total amount. Now, less cost of liquidation. You know, to liquidate this company, we incur cost of liquidation. Cost of liquidation, 3,850,000. That will now give you net amount. Please, the differences, this should be 18,150,000. This is the amount realized from assets that are not collateralized, non-collateralized assets. You are going to keep this in view. Next. Now, let's pick collateralized assets. That is charge. When we say collateralized assets, that is the charge asset. From freehold property, how much can we realize? 10 million. You pick it, you come here. Amounts realized from freehold property. ₦10 million. You now put a comment. This amount will be used. The proceed will be used to repay secure debentures. Is that clear, please? The proceed will be used to repay secure debentures. Is this clear, please?
Yes, sir.
Good. Now, how much is the secure debentures? Go to the, how much?
Million.
Sorry, the line is breaking. How much?
15 million.
Thank you. Thank you. Secure debenture is 15 million. That means the debentures holder has given this company 15 million loan. And the company property has been used as collateral. Now we have disposed the company property. We can only realize 10 million. This 10 million will be used to offset secure debentures holder 15 million. To repay secure debentures. You now come here. Let me move this up a bit. We show the working small here. Debentures, 15 million. I'm just trying to shorten this. Amount realized or proceed 10 million. That means we are not able to settle debentures holder fully. We are left with what?
5 million.
Thank you. Outstanding debentures. Outstanding debentures. 5 million naira. Now, how would the debentures holder claim this balance? If you remember our explanation at the last class, under fees charge, debentures, they can't move, they cannot go to another asset directly because it's a fees charge. Under the fees charge, the creditor cannot go to another asset directly, but it will rank. I have to make that comment. Look at it. The debentures holder. Debentures holder. Debentures holder. We rank alongside other unsecured creditors. Other unsecured creditors in order to claim the outstanding balance of 5 million. This will be part of your report. You see it now? Debentures holder cannot get their money fully. The balance remaining, they will go and join other unsecured creditors in order to claim the outstanding balance of 5 million. I hope this explanation is clear.
Yeah.
Okay, great. Now you observe that we are dealing with liquidation. We have distributed the 10 million. realized from property. We have used that 10 million to repay secured debentures holder. If you remember the priority of distribution, if you recall, when we were explaining the steps for capital reconstruction, step 2, priority of distribution, the fees charge creditors, fees charge secure creditors, we collect their money first. In this question, debentures holders or the debentures holder is the fees charge secure creditors.
Yeah. Yep. Yeah.
Please help us mute. Wherever it is, please help us mute your speaker. We hope all is well, right? Now you now move on. We are now left with how much? We are left with 18,150,000. Is that not, please?
Yes, sir.
Good. We are now in distribution. Once you liquidate company, is to distribute the money. Remember when we explained, after fees charge, who is next?
Preferential.
Preferential creditors. The preferential was creditors.
Creditor.
Yeah. In this question, who are the preferential creditors? Unpaid taxes. Assuming in this question we have unpaid taxes, that will be the next thing to be settled out of the 18 million remaining. Preferential creditors include unpaid taxes, unpaid pensions, unpaid wages and salaries. Assuming we have these items in this question, then out of that 18,150,000, we are going to settle that. But we don't have unpaid taxes in this question. We don't have unpaid pension. We don't have unpaid wages and salary. That means there's no preferential creditors. All right. In this particular question. Next, who is the third person to collect money? Your line is breaking. After preferential creditors, who is next?
The ordinary shareholders.
No.
Floating charge.
Thank you.
Floating charge.
Floating charge secure creditors is the next person. In this question, we don't have floating charge secure creditors. After that, who is next?
Redundancy payments.
Great. Redundancy payments. What is redundancy payment? That is, if a company is liquidated, definitely the employees will be rendered redundant. Then the company can decide to make payments for making the employee, for rendering the employee redundant. So in this question, we don't have redundancy payment. What next?
Unsecured creditors.
Great. You now come here. You now move to it. You know, you are now following the order of distribution. Are your next paragraph now? You now put your next paragraph. The total unsecured creditors will be. Now, please go to the statement of financial position we are giving. Go and look at the current liabilities. Pick your unsecured creditors for us and the amount.
Secured payables.
Thank you. We have unsecured payables. How much?
20 million.
How much?
20 million.
Thank you. Unsecured payables. Unsecured payables. The amount 20 million. Next.
Bank overdraft, 8 million.
Bank overdraft unsecured.
8 million.
Oh, it's overdraft. Pardon me. Let me erase it. Not overhead. Bank overdraft. Overdraft. Amount 8 million. Okay, 8 million. Next, any other item? Please look at the notes here. Let me check. Okay, that's great. No, sir. That's fine. Oh, no, sir, how are you doing? Now look at this aspect. The ventures holder will rank alongside other unsecured creditors in order to claim the outstanding balance. The outstanding balance of 5 million. That means you are going to bring the ventures unsecured. Now come outstanding debentures. It's now part of unsecured creditors.
Okay.
How much? 5 million. Please, oh, sorry. 5 million. Please sum up total. 33 million. This is the total unsecured creditors. These are our total unsecured creditors. It's okay. It's okay. Now come here. Remember, we only have 18,150,000. Is that not?
Yes.
How do we share the money now? It's not sufficient, Navi. How do we share the money? Total unsecured creditors, 33 million. The cash available from liquidation is 18,150,000. Now, how do we distribute this amount? Please note, this amount will be prorated.
Okay.
The money is not sufficient to go around. So we are going to prorate this money amongst the unsecured creditors. Look at this. The next paragraph now, you now come here, you say, the net amount realized in brackets 18,000,000.15 days. Let's shorten it. Will be shared between the unsecured creditors as follows. You want to share that money. Now you now come here. Unsecured payables. Our unsecured payables is 20 million. The total amount, the total unsecured creditor is 33 million. Multiply by the amount we want to share, 18.15 million. Please, how much do you have? You move to bank. The total amount due to bank is 8 million over 33 million. Multiply by the cash available for distribution, 18.15. How much, please? Then
That one is 11 million.
this is how much?
11 million.
11 million rand. Thank you. 11 million. The ventures holder, we get, they have 5 million remaining over 33 million multiplied by 18.15. How much, please?
The second one is 48.4.
48.
Yes, sir.
48 million
Yes, 400,000.
is
No,
not possible.
no.
4.4.
Yes, yes.
It should be 4.4 million. 4.
Yeah,
4.4
4.4. 4.4.
million. Then the last person, this should be 2.75 million. Please reconfirm.
2.75, yes.
So
Yes,
we have
sir.
finished sharing the whole money. If you check it, we have shared 18.15 million. No money to share. Is that not? We have finished sharing money. Who will connect next? Preference shareholders.
Preference shareholders.
Good. In this question, we don't have preference shareholder.
Yes.
Then the last person is ordinary shareholder. Is that not, please?
Yes, sir.
And we don't have money to give anybody again.
Very, very good.
So you are going to put a note. Please hold on, Samsung. The ordinary shareholder will receive nothing if the company is liquidated. Yes, you can ask your question now. You can unmute and ask your question, Samsung.
Good evening, sir.
Yes, welcome, sir.
Please, sir, I want to confirm all these calculations, will it be embedded in the body of the report?
By God's grace, it will be your report.
Okay, sir.
Examiner says,
Thank you.
prepare a report, including appropriate calculation. The calculation will be embedded in your report. All right, it's a good question. So you put a note, the ordinary shareholder we receive nothing. This is the liquidation. If you now, examiner says, discuss the advantages and disadvantages of the proposed reconstruction scheme from the viewpoint of ordinary shareholder, secure debentures holder, and bank. Let's do a summary. Summary of liquidation position. We now pay attention to the three stakeholders. The question has mentioned. We are going to pay attention to the three stakeholders this question has mentioned. One, the ordinary shareholder. The ordinary shareholder receive nothing. Two, they secure debentures holder. We receive proceed of freehold property $10 million, then share as unsecured creditors, unsecured creditor. They will get, why is it still canceling? Property. They will receive 2 million, 2.75 million, totaling 12.75 million. Is that not, please?
Yes, sir.
Good. Remember that the debentures holder has given loan to the company 15 million. Is that not?
Yes.
Yes.
And that means if the company is liquidated, they can only get 12.75 million. That means they will lose some amount. Is that not?
Yes.
How much will that be?
2.5 million.
Thank you.
2.25.
2.25, yes, that's correct. Now you put that note then. Note. The debentures holder we lose. I can put the amount. 12 million minus 50 million minus 12.75. The debentures holder will lose 2.25 million if the company is liquidated. The debentures holder will lose. This will be part of your report. That means if this company is liquidated, the maximum amount the debentures holder can receive is 12.75 million, thereby losing 2.25 million. Then you go to the third person, bank. The third person, bank. Three, bank. How much will the bank receive?
4.4 million.
Thank you. The bank will receive 4.4 million. Now, bank has given an overdraft of 8 million naira. Now, if the company is liquidated, bank can only receive 4.4 million. How much will the bank lose?
3.6.
Thereby losing 3.6 million. Let me put it. That is 8 million minus 4.4 million. This is part of your report. You are done with the liquidation aspect. We now look at
Sorry, please. I have a question.
Please, I'm not sure I can hear you.
Sorry, sir.
Can anybody hear her?
No, sir.
No, sir. Let her
Okay,
text.
can you hear
Maybe
me,
she
sir?
can
Good
text.
evening, sir.
Oh yeah, okay. I think she's ready to speak now. And please, if you want to speak, signify. Let's
Good
know
evening,
you
sir.
want to
Can you hear me? Yeah.
now. Faith,
Good evening.
favor, right?
Yes, sir. Favor, sir. Sorry, I
All right,
wanted
please
to
go
ask, how
ahead.
did you get that 4.4?
Okay, that was the calculation we did. We move. Let's move to that place. Look at it. How we got the 4.4. Okay, look at it here. If the company is liquidated, okay, please hold on, Olatunji. Look at the 4.4.
Okay, sir.
Unsecured
Oh, okay,
payables.
okay.
Are you fine, Faith?
Oh, yeah, I've seen it, sir. Thank you, sir.
Faith. Now, Ahmed, you can go ahead with your question.
Okay, sir. Just I want to know the reason why ordinary share is receiving nothing.
Okay, great. If you want, the reason is that there is no money again. All the money has been distributed. No cash is going to ordinary shareholder again. You know, we have the order of distribution. If a company is liquidated and the asset realized, the proceeds will be distributed as specified by the law. So there is order of distribution.
Right.
So the reason is that we don't have any cash again. In fact, you observe that we cannot even settle bank fully. Did you observe that?
It's fine. It's fine. Yeah.
Okay.
Thanks.
All right. You're welcome, please. So if you are faced with question on reconstruction and you want to now deal with the explanation, advantage and disadvantage. So you are going to look at if the company is liquidated and the assets realized, how much can we realize cash? Then how do we distribute the cash? Like I said in the classroom, you cannot use your own personal idea to distribute the money. You are going to follow order of distribution. All right. We now move to the second case. If the company is reconstructed as proposed, second position now. Okay, fine, page 4. Yeah, I can start from here. Now come here. We have looked at liquidation. Now come here. Case 2. If the company just one. I want to put something and come here, I will check. Somebody is trying to send a message. Reconstruction. That's case 2, reconstruction. Now put a note. If the company is reconstructed as proposed by the directors, comma, the statements of financial position, the statement of financial position of the reconstructed company, is provided in parts A above. Now, if you look at the statement we have given, if the company is reconstructed as proposed by the directors, the statement of financial position of the reconstructed company is provided in part A above. The part A above is the solution A. That solution A we did in class last week. That is the statement of financial position of the reconstructed company. Is that clear, please? If you recall, requirement A says prepare statement of the financial position of the company after the completion of the reconstruction. Is this point clear, please?
Yes, sir, it is.
So you are going to refer the examiner to that statement of financial position that you prepare in part A. All right, you now continue your report. Next paragraph. Should the reconstruction succeed? Should the reconstruction succeed? Correct. Statements of profits or loss is presented below. You know, you are telling the examiner that if this reconstruction succeed, then the statement of profit or loss is presented below. Now look at below. Now go back to the question. Let me take you to the question. Let's go to the question quickly. Now you have to be dragging. Get to the question. All right, look at it. Yeah, that's fine. Okay. Look at this paragraph. Now, please look at it. Trading conditions are now improving. And the directors estimate that if new investments in plant and machinery costing 12.5 million were undertaken, the company should be able to generate annual profit before interest of 8,750,000. Can you see it? Should the reconstruction succeed, that means the company will achieve annual profit before interest of 8,750,000. Can you see that, please?
Sir.
Can you see that, please?
Yes,
Yes,
sir.
sir.
Yes, sir.
That is the profitability of the company. Test for profitability. You now go back to your report. Anthony, you are touching my screen. Okay. Cheers. That's it. You have to drag it. You have to be moving. That's it. That's challenge for online class. At times, you have to, and because you are online, drag the system somehow. I have to just go back to this side again. Yeah. Oh, English. Okay. Okay. Should the reconstruction succeed, the statement of profit or loss is below. Now come here. Annual profit before interest. Examiner say 8,750,000. That means interest has not been deducted. That's okay. Less interest. Now, our focus will be on the reconstructed statement of financial position. Hello? Our focus now will be on this reconstructed statement of financial position. So go to that solution A. Will the company pay interest or not? Go and look at liability falling due after more than 1 year. Non-current liabilities. Check it.
14% unsecured loan stock.
Thank you. We have two. 14% unsecured loan stock. One is meant for debentures holder, and one is meant for bank. You are going to compute. Now look at it. Look at the computation. Like this. For debentures, we have 14% of 6.5 million. Please compose. That will be the interest paid to the debentures holder under unsecured loan stock. Please compose. For bank also have 14% unsecured loan stock of 6 million. Please calculate the interest to be paid by this company to these stakeholders.
For debenture, 910,000. 910,000, yes.
910,000. To the bank, how much are we going to pay? We are going to pay to them. I think 840.
840.
Total interest payable. Total interest payable.
1.750.
1,750,000. The difference. Profits. That should be 7 million.
Yes.
In this question, do we have tax?
No.
In this question, there is no tax. So this is your profit after tax, because tax is assumed to be 0. That means if this company is reconstructed, the company can generate earnings after tax of 7 million annually. Remember, we said you are going to test for post-reconstruction financial profitability. If this company is reconstructed and the reconstruction succeeds, then the company can generate a profit after paying interest of 7 million. And the company will not be liable to pay tax. Is this clear, please?
Yes, sir.
Great. The next question is, how do we distribute this money? You know, this is profits after tax. We have paid interest to the debt holders. Please, somebody's whose phone is conflicting my class? Okay. No. We have paid interest to the debt holders. We are not going to pay tax. That means this 7 million is earnings attributable to shareholders. Profit attributable to what? Shareholders. Now, the next question you are going to ask yourself, please hold on, Adebayo, is how will this profit generated be distributed between the shareholders? Yes, your question, Latif Adebayo.
Okay, thank you, sir. I just wanted to ask why the company is not paying tax.
Okay, great. In most cases, if a company is facing financial crisis and the company is at the risk of being liquidated, government will allow them some tax relief. You know, the company is facing challenges now. And it is not the intention of government to kill company. So they will give them some free tax holiday to allow the company to survive first. Is that clear? Because if the company should collapse,
yes, sir,
the greater effect also, part of the effect is that unemployment rate will increase. And that no government want to increase unemployment rate. So they will allow tax to fly. Is that clear, please?
Yes, sir. Thank you very much.
All right. So the examiner didn't give us tax, and it is logical not to have tax. So the next thing you are going to try to do is, how would this 7 million be distributed? We now go and look at if the company is reconstructed, who are the shareholders in the reconstructed company? If the company is reconstructed, who are the shareholders in the reconstructed company? I will take you to the working we did last time. I want to show us the shareholders in the reconstructed company quickly. Okay, I think it should be here. If you remember this working we did, very slow enough. I wanted to try and make this thing. Yeah, this working three. Yeah. Now look at this. The ordinary share capital. Remember, we have 20 million shares before. Under reconstruction, we were asked to write down the share capital by 15 million. We are now left with 5 million. Okay. That is the original shareholder, 5 million. The debentures holder, the debentures was converted to ordinary shares of 7.5 million. Okay. That means in the reconstructed company, we have two categories of shareholders. We have the original shareholders before. We have the debentures holders converted to ordinary share. That means in the reconstructed company, we have two categories of shareholders. The existing shareholders, the debentures holders converted. The existing shareholders have 5 million in the company before rights issue. The debentures holder has 7.5 million ordinary shares in the company before rights issue. We now did rights issue 1 for 1. All right. I will take this back now. Let's go to our working today. Line. Okay. I acquire page 5. So when you are done with the profits, what you are going to ask yourself next is, how will this profit be distributed to the shareholder? You now go and check who are the shareholders in the company. In this that is the reconstructed company. In this reconstructed company, we have two categories of shareholders. Okay. This page I require. I now come here. Now come here. Shareholders in the reconstructed company. We have the original shareholder. Original shareholders before rights issue. Before rights issue, they have 5,000 shares. We have the debentures holder converted to ordinary shares. The debentures holder converted. They have 7.5 million shares before rights issue. Now, the examiner now say right issue. Right issue. Remember 1-for-1. Now, under 1-for-1, the ordinary shareholder, they have 5,000 shares before. If you now do 1-for-1, how many new shares would they be entitled to?
5 million.
$5,000.
Yes, of course. Thank you. 5,000. We have 30 off. The ventures holder, they have 7.5 shares in the company before right issue. We now do 1-for-1. They are going to also get 7.5. Abi? That means after the right issue. After right issue. Shareholder, ordinary shareholder, we have 10,000 shares. Abi? These people, we have 15,000 shares. Is that not?
Yes.
Total 25. Is that not? That means if you do percentage of shareholding, look at it. I can come here and say percentage of shareholding in the reconstructed company. Shareholding of shareholding. That means the original shareholder. Original shareholder why is he moving out now? 10,000 over 25,000. That is 10. Find a percentage. 10,000 over 25 multiplied by 100. What is the percentage? In percentage, that should be 40%.
Yes, 40.
The ventures holder now, we have how many percent? The ventures holder in the shareholding, that is 15,000 over 25,000 multiplied by 100. They will have 60% shareholdings. The ventures holder now, technically, if you look at it technically, the ventures holder are now the majority shareholders in the company.
Yes, sir.
This percentage will be used to share profits. Profit is shared based on the number of shares owned. The ventures holder now have 50 million shares in the company. So you cannot do share of profits. Share of profits. You can do share of profit now. Please, all this computation will be in your report. Share of profits. Original share of profit. Original shareholder. We collect 40% of 7 million. Please work this out. That should be 2.8. Please hold on, Samsung, I'm coming. That should be 2.8 million. The ventures holder, we collect a profit because they are now part of the shareholders. We collect a profit of 60% of the profit from the company. That should be 4.2 million. Yes, your question. That is the share of profit. Yes, Mr. Fanson, you can speak.
Hello, sir.
Yes, please.
Yes, instead of going through the route of when you are apportioning the share profits between the debenture and the ordinary shareholder, instead of going through the route of 40%, 60%, Is it not the same thing if we do like 10 over 25 and 15 over 25 respectively?
Okay, as in we can just go straight 10 over 25 multiplied by 7 million. Is that not?
Yes, will it not?
Yes.
Yes, will it not say amount to the same thing?
It will give you the same thing.
Okay, sir.
Now let me now drive it forward. You are still going to get the same 2.8, 4.2. If you now get to your notes, you now need to make reference to it. That when you're now part of your note now, you are going to when you are doing that report, now say, okay, it should be noted that the ventures holder now controls 60% ownership in the company. And they will have 60% control of the company. The ventures holder can now determine who is the MD. The ventures they are debt holders before. Technically, the ventures holder has taken over the company.
Yeah.
So this percentage will help you for explanation. Is that clear to you? Okay.
It is, sir.
All right. Thank God we are following. Okay. You now need to do evaluation of the results. We now need to do evaluation of the results. And we are almost rounding off, Seth. Evaluation of results. At this evaluation point, you want to compare both now. You want to exactly write in here now. Now look at it. Evaluation of the results of the proposed reconstruction. The result of the proposed reconstruction from the viewpoints of the following stakeholders. You now start the evaluation now. So at this point, all of us we are now going to start discussing now. 1. Ordinary shareholder. Ordinary shareholder. This is where you are now going to compare and start comparing. Let me take the first one. If the company is liquidated, and the assets realized, the ordinary shareholder will receive nothing. On the other hand, or alternatively,
So you wrote the company instead of the ordinary shareholder.
Oh, okay. Thank you. Alternatively, let me go back to that. The ordinary shareholders, okay, the shareholders I want to even put ordinary. Ordinary shareholders will receive nothing. I will full stop. Now comment. Alternatively, if the company is reconstructed as suggested by the directors, what will happen? The ordinary shareholder will have to subscribe for the shares. Is that not under right issue? Is that not, please?
Yes, that's
Hello?
correct, sir. That's correct.
The ordinary shareholder, you now have to put that. You put it there. The ordinary shareholder will be required to make additional investments of 5 million naira in the reconstructed company, so as to take up the rights issue. That means they need to invest additional 5 million to the company to buy the rights issue. In exchange, the shareholders will receive a profit of 2.8 million. Look at it now. They need to invest 5 million to collect a profit of 2.8 million. So what will be your advice to the ordinary shareholder? Should they accept reconstruction or liquidation? Hello, guys. What will be our our recommendation or suggestion to the ordinary shareholders? Should they accept reconstruction or liquidation?
Reconstruction should be go for. They can go for reconstruction.
Any other opinion?
So we don't know how subsequent year will be, so that if they don't make any profits now, if they can make profits.
So what will be your recommendation? Assuming the shareholders, they have hired you as their consultant, what are you going to tell them to do?
To go for reconstruction.
Reconstruction. All right.
Hello, sir.
Yes.
Well, I would also suggest that the company should go for reconstruction, but we would need to, how do I put this now? We need to ascertain the validity of that profit forecast. Is it real? Is it something
You
that
know,
is
there's no
achievable?
way you can validate the profit forecast, but you must advise your clients. Now, your clients are the shareholders. They have hired you to act on their behalf as a financial consultant. What are you going to tell the shareholders to do?
Well, it's so controversial, but now if they liquidate, they lose, they will not get anything. And to get this 2.8, they also have to invest 5 million.
Great.
Profit of 2.8.
So what will be your advice?
Well, I would just say maybe they will just go for the liquidation without get anything. Maybe think of another investment or another.
All right. Let's now see our comment. I think I'm having a system is hanging. I thank God for this class. A bit of my location change, so I'm a bit. All right, the comment will be, I'm just trying to wait, same is hanging. Okay, let me comment on that so that we can move. So your comment will be, it appears the reconstruction is in the best interest of ordinary shareholders. However, this will depend on the validity of the profit forecast. The validity of the profit forecast. If the forecast turns out to be wrong, the ordinary shareholder will lose further. So you are going to make this known to them that it appears the reconstruction is in the best interest of ordinary shareholder. However, this is dependent on the validity of the profit forecast. If the profit forecast turns out to be wrong, the ordinary shareholder will lose further. on their investment. This will be your comments as regard the ordinary shareholder. When you are done, the next person is secure debentures holder. The secure, number 2, the secure debentures, holder. Secure debentures holder. Again, you are going to compare. If the company is liquidated, please, because of I'm having a technical glitch here, so I will not be able to write. But let me explain. I might share the note later. So your comment will be under secure debentures holder. You are going to comment. If the company is liquidated, the maximum amount secure debentures holder will collect is 12.75 million. Remember, we have calculated this before. Hello? We have calculated this before.
Yes,
Good. If the company is liquidated, the maximum amount secure debentures holder we get is 12.75 million, thereby losing 2.25 million. You put that as a comment. On the other hand, if the company is reconstructed as proposed by the directors, the secure debentures holder we provide or will be required to make additional investment of 7.5 million naira in the company so as to take up the right issue.
Please, can you take back again?
No, don't worry, I will share the notes. Is that clear?
All right.
I will share the note. If the company is reconstructed, secure debentures holder will be required to invest 7.5 million in order to take up the right issue. They will also debentures will be converted partly to ordinary shares of 7.5 million. In total, debentures holder now control 60% of the company's equity. In total, debentures holder now control 60% of the company's equity. They will receive share of profits, 4.2 million. We have calculated this before. They will receive share of profit from the company, 4.2 million. They will also receive interest on the remaining debt, 910,000. And they are now the majority shareholder in the company. You can now ask yourself, which one is better for the debentures holder? Liquidation or reconstruction? When you are done, you now move to the bank. If the company is liquidated, the maximum amount bank can collect is 4.4 million. thereby losing 3.6 million. Alternatively, if a reconstruction is agreed to, the bank overdraft will be converted to 14% unsecured loan stock that are worth 6 million naira, repayable in 5 years. That means the bank will have to wait for 5 years before receiving 6 million naira. And the bank will lose 2 million naira. I don't want this. My laptop is I wish to take this thing full in the classroom, but I'm having a technical. That's why I'm even trying not to write. I just want to explain. But the full note will be shared so that you can look at the note. All the computation has been done. The report is just to bring your figures in. All right, any question, please? I'm about to shut down this class. Any question, please? Any question, please?
No question.
No question from this end.
For me, no question.
All right, I don't want this thing to go down and say will affect my recording. I will be checking out of the classroom.
Okay, sir.
All right, sir. Thank you, sir.
Thank you so much. Have a good night.
After the class, I will share this document. I will also try and share the full report. You can look at it. I'm pretty sure that you shouldn't have any challenges because all the figures and the explanation is there. All right, thank you.